Hi, I'm Peter Rose, founder of Longwood Currency Trading. Trading Forex range-bound price action. Let's chat about that a little bit. I'm going to go over the 4 bullet points that I'm going to be talking about, just so you can see where this thing is heading. First of all, what is a range? Second, can you have a range within a trend? Third, would you trade a range in a trend? And is trading a daily range the same as trading a 5-minute range within a daily? Those are interesting questions, but I think they get at the root of considerations that your rules are going to have to be cast in order to accommodate those scenarios. And there are others, and they have branches to them, but this is a simplified this is a path through the clutter to try to identify at least some base points, talking points that you can then get involved in your own real-time trading, and you can look at the chart and go, holy crap, what is this that I'm trading? The solution to any answer in this regard, and in any regard, is not based on Fibonacci numbers, the news, economic indicator releases, or anything else, particularly in the Forex market, based on the purpose of the Forex market and its structure. Decisions are always based on price action. Now, if you want to be a fundamental trader or you want to be a technical trader, what are those fundamentals and what are those technicals being applied against? They're being applied against price action. And so, to make things simple for folks that choose to take my fast track course, we eliminate all that stuff and we just say, look, let's look at price action. That's the dog in the thing, so why don't we look at that? Instead of worrying about what the Fibonacci is doing or the Bollinger Bands, because those are after the fact, because they're all lagging indicators. All indicators are lagging. When we're looking at range-bound price action, we have to say, well, what is that? What is a range? Oh, Peter, well, you have structural things on the top and you have structural points on the bottom, swing points, and you draw lines across there and you're in a range if you have a lot of hits on that area. Can you have a range within a trend? Well, yeah, I mean, you draw your trend line supporting the, if it's rising up, you draw it on the bottom of the price action, and then you make a duplicate of that, move it up onto the tops, and you have let's say a rising trend, you have a rising range. Well, that seems like it would be a mess to try to trade a range on a trend. Well, how would you trade a trend as a day trader, as we are, as opposed as to how you would trade a range as a position trader? Now, I don't think trading Forex in a long-term reference frame is really very practical because of the retracements that the price action has. You look at any chart, on the 5-minute chart, and well, you don't have to look at the 5-minute chart, but you look at any chart of the majors, and you'll see that over a 2-day period, you could have a 200 pip retracement. And then it will come back 200 and it'll drop another 50. And then it'll retrace 200. And so you're somewhat bound within this range. And yet you have this longer out that you go in the time frame, the more that range will be slanting down. Daily slanting down trend will have ranges bouncing off the boundary conditions of that trend. Well, instead of talking about boundary conditions, we talk about order flow and order flow congestion. That's getting to the root of what boundary conditions, support and resistance lines, trend lines, and all that stuff are. They're simply expressions of order flow change. So would you trade a range in a trend? Yes, you would, or you could, but it depends. Well, what does it depend on? Well, it depends on the periodicity of the waves of the price action. It depends on the amplitude of the change as the candles constantly move up, say in a long-term trend. If those conditions aren't correct, then you can't trade that range that's bound within a trend. Well, wouldn't those conditions be the same if you were trading on a flatline range? You know, you just have price going between these 300 pip positions, support and resistance, on the what? 4 hour or the daily? And the 4 hour and the daily are really the same thing, right? You just get more points. We know because of order flow in the currency market that it's not really weekly trends or ranges are really sort of immaterial. Those are the far out boundaries. And again, that's because of the order flow. So you have these daily, let's say, ranges or 4 hour ranges, and then you go down to the 15-minute, and oh my God, you've got these. And then you go down to the 5-minute, and you've got these. But the 5-minute ranges are probably a little bit this way, in harmony with the trend, or maybe this way and counter trending. Now we're getting into a level of complexity because the fourth question here was, is trading a daily range the same as trading a 5-minute range within the daily? Isn't that interesting? The solution that should be evident to you at this point is that we don't think about ranges because they're complex. There are too many decisions to be made. And you want to keep your view of the market simple. So when I'm working with a student on the fast track course, toward the end or maybe as if they move into advanced training, we break these ranges down into what they really are. Is they're waves with periodicity and amplitude you would find if you're studying math or physics. And so the analysis of wave action is some of the more complicated in physics and math. You're using, well, depending on how those amplitudes and periodicities are, you could be working in second order difference equations to solve some of that stuff. Schrodinger's wave equation in physics is one such animal. It has 3 solutions. It drives you crazy as a senior trying to figure out how to solve that. When we're looking at our trading, do we want to look at Schrodinger's wave equation and write computer simulation programs to mimic that so that we can study it and run testing against it? No. Step back from the chart and look at price action and apply the rules of interaction with that price action that you've written and trade. It's simple. It's simple if you follow the recipe that I provide in all my videos and in the training that I give in what's called the life cycle of a currency position: entry analysis, position management, and exit methodology. Those are 3 problems within the scope of solving the overall Forex market. You can't exit a position until you enter one. You can't manage the position until you enter it. You can't exit until you've managed the position. So those are in sequential order. If I just had 3 independent rules that weren't in sequential order, instead of 1 path through the solution, and if I had 3, I would have 15 possible paths through that. I give this as it's part of the math that we have to understand in probability analysis. If I'm using, for example, 2 indicators, A and B, how many different ways can I arrange those 2 indicators? Well, I can use A or I can use B. Well, okay, let's look at this. I can use just A, I can use just B, or I can combine A and B with the emphasis on A, or I can combine B and A with the emphasis on B. So with 2 indicators, I have 4 what's called permutations or decisions. So if I had 2 indicators or two non-sequential rules, I would have 4 different ways I'd have to consider that at runtime in order to decide what to do. That's with 2. With 3, I've got 15 different decisions. With 4, I have 64 different possible solution paths. And with 5, I have 325 different permutations in 5 things. So if you've got a couple of moving average lines, you got an ATR, you're doing a Bollinger Band and an RSI, there's 6. I don't know what the number is there, but you've got 325 different ways you can arrange all those indicators with weighting put on different ones at different times. How would you possibly trade? Well, you can't. Even 2 non-sequential things that you're trying to do create 4 different solution paths. And so when we're looking at the question of do we want to trade range-bound price in a trend or range-bound price in a flatline basis, are there complications within either one of those? Well, yeah, they are. Well, when I talked about the trending price, we talked about periodicity and amplitude. Well, if you flip the trend on its side, you have a flat bound range. What's the difference between a flat range and a trending range? Oh, well, there's nothing. Well, that simplifies things. Well, if you keep simplifying the problem down, then there's no question about how do you trade Forex range bound price action. You just trade the price action. If you have any questions about this stuff, again, feel free to send me an email. I'd love to chat with you. Let's get a conversation going. I'm not going to try to sell you my course. I don't have time to teach 10 people at a time. So I'm not going to try to sell you. If you're interested in working with me, great. We can talk about that and we'll go over the course structure and what happens. And if that interests you, fine, we could talk about it. But I think talking about things like the differential between price action in a trending range or in a regular, how we normally look at ranges, trapped, like in a flag pattern, a horizontal flag pattern. I think that's something that you have to consider when you're building your rules. So you have to be sure that those scenarios are part of your rules. Well, how are you going to learn all the different scenarios? Maybe I'll do a video on that. Although that's too complicated. Let's keep things simple. Don't worry about ranges. Just trade your price action. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.